Hello, everybody. Welcome to the Trading with Ashley show. What a roller coaster day. What a roller coaster couple of days that we've had in the market. And although that may be scary for a lot of you, for an option seller like me, I am so pumped up. We have made so much money in the last few days. We're not afraid to strike when the iron is hot. And so today's video is going to try to help you frame it in your head about being an option seller and how this works and how the higher volatility actually means more money in your pocket. With everything bouncing around and nobody quite sure when the next tweet is going to come out, they weren't sure what Jerome Powell was going to say. Nobody knows what China is going to do. All of those big question marks on the market, they create the uncertainty. The uncertainty pushes people to actually buy put options to protect their portfolio. Well, in steps an option seller, we're the ones selling those contracts to those individuals that are wanting to protect their portfolio. It's wonderful how the market works and how those that are afraid end up buying insurance from someone that's not afraid to actually step up and say, I'll take your stock at a discount and I'll be paid in case I don't get the stock. I'll still get paid for offering that insurance. That's the market cycles, and that's how it works so well. And so when you have the question mark on the future, that's when I come alive. And I'm telling you, we were on fire today. I woke up early. I was studying the pre-markets. I saw what was happening and we struck. We were able to buy some incredible trades. I'm going to just kind of show you how much money we made today just from these trades this morning. And by the afternoon, they were all in profit. Now, we had a little bit of a blip at the end of the day as well, but that's perfect because it set us up for tomorrow. I'm telling you, if you are not in a community like mine where we actually are taking full advantage of all these opportunities, you are missing out. I constantly hear from my community how much they are learning and growing in their knowledge. In fact, I want to celebrate a couple of them. So, Kara, I want to tell you how proud I am of you. Kara has graduated to the six-figure club. Now, that's a really big deal when you're a trader. Once you're at six figures, things just become easier. You, especially if you're selling options, have so many more ticker symbols that you can work with, and you start seeing the money pile up really fast when you have a lot more money, like $100,000 to work with. And Kara's been with me for a full year now, and I'm so proud of her. She has stuck with it. She actually took my boot camp. She studied. She asked a lot of questions, and then she just started trading using the system that we use over and over to make money. Very proud of her. And then we have a brand new TWA millionaire. Jay just announced to us that he's crossed over into the $1 Million Club. Now, that's not easy to do when you've had this much bread in the market, but he did it, and I'm so proud of him, and he made some of the trades with us today. I'm sure that we're going to show even greener in the coming months. And so this is meant to encourage you and to share with you how the market works and how you can take advantage of it. Now, everyone might get upset over what's happening and all the back and forth, but if you can't beat them, join them. Jump into the volatility. Use it to your advantage to pad your portfolio. Why not? And so today we did some moves with the NASDAQ. You know, I love buying QQQ skips and leaps. And there is a certain set of circumstances that I buy them. The lower we go in moving averages and tap those moving averages, the more I buy in the longer term I buy. And so you might be familiar with one of my larger purchases, which was 20 leap call options on April the 7th. Those continue to outperform. But I also add to that position with different strikes in different expiration dates every time the NASDAQ comes down to an important moving average, whether it be the 20 or we almost got down to the 50 today. I'm hoping we do touch it here soon so that I can finish loading up on all the leap call options that I want for my portfolio. And so I'm going to show you what I look for. I'm going to show you some of the positions we did today and how you can really make money in this environment. And then I also have a gift for those of you that are curious, how much money do I actually put in the market? You know, I love to use the Seen in Fear and Greed Index to help guide my trading decisions. Well, you can also use it to best determine how much money you pull from the sidelines into the market. So I like to share with all my community members that it's really good, especially when we are in extreme greed, to go ahead and cash up because honestly, at that point, the volatility is low anyway. So you should be cashing up because it's not like you're going to make tons of money selling options when the volatility is that low. Cash up when things are in profit. Then, when all heck breaks loose and that dial goes all the way down to extreme fear, we're very close to it today. That's when the option premiums spike because of volatility spikes. And that's when I pull all of that money into the market and I start doing the trades that are going to pay me handsomely. So I do two things. One, I sell options. That's a great opportunity because the volatility is high. I'm providing insurance. But the other thing I do is I go ahead and I purchase skips and leaps. And I do that primarily on the NASDAQ, as I've shown you. Now, I will tell you, because that volatility is high, I am paying a little bit more in those skips and leaps than I typically would when everything's tranquil. But keep in mind that the bigger mover is the price of those instruments. So even though volatility is higher when I'm making the purchase on my skips or leaps, the price of them is low enough to where that volatility that made me overpay for those instruments, I can overcome that pretty easily as the market picks back up. So when I make these purchases, I am shoring up the next year or the year thereafter for continued gains. I want this for all of you. So let's jump into the computer and I'm going to share with you some of what we did today. Maybe you can use this to inspire you to pad your own portfolios. Now, today we were having a lot of fun in the community trading because you can see here we were at 27 on the fear and greed. And as I shared with my community, my only fear is missing out on great deals. So I use the fear and greed index quite a bit to help guide my trading decisions. So I'm going to show you how I use it to decide how much money I deploy that I had actually cashed up on. I put this together. Now, I had shared this visual with you once before, but I like it because it really helps you make a really good decision on when to take your cash from the sidelines. So here's the way this works. When we are in extreme greed, this is when I have built up the vast amount of cash from earlier trading. I go ahead and I get out of my positions in profit and I build up my cash. Something else to consider is when we're in extreme greed, the volatility usually isn't very high. And so I'm not getting as much for option selling premium. But if I've cashed up here and then the market starts to go down, like right now, we were in about right here on this 25, 27 area, this is when volatility increases quite a bit. So now I'm pulling that money from the sidelines that I had made from my earlier trading and I am starting to deploy it again into the market. Now I'm doing that by either selling cash secured puts or I'm buying skips and leaps, or you can even do credit spreads. But if you look at this visual and you can do a screenshot of this, it will help you in the future. This is how I manage my trading funds, and it really has served me well through the years. Now, this gives you a sense for how our trades have been going. You can see here, all this green that you're seeing, these are closed trades that we have taken throughout the month. And then you see those here in yellow, all of these expire on Friday, and everything's looking green, even in this red type of day and dynamic that we're in. There is one trade that is under $5. This is a 140 Robinhood strike. Now, we will more than likely just take assignment of this because in the future, Robinhood will overcome this very quickly if we get assignment. But seeing all of these trades green like this, even when the market's down, this shows you how a system, if you put it in place and you follow the rules, it can really work and make you wealthy. Now, if you want all of these trades real time, that's what you get by being part of my community. And I know you will not be disappointed if you decide to join. Next, I want to actually look at the technicals on the NASDAQ. And after this, I'm going to show you how I select a skip or a leap, which one I select when I'm buying. Well, first of all, you've got to know when to buy. Now, here's what I do. Anytime we touch major moving averages, I go ahead and I make the purchase. So you can see up here, we were at the 20-day moving average. I made some purchases around here. Then almost today, we almost got down to the 50-day moving average. Not quite. Don't know if we will get there, but if we do, this is when I will buy heavier. Now, I'm going to show you some of my positions. You can see here the 200-day moving average. When we were below it, that's when I bought the vast majority of my positions when I was looking at skips and leaps. And so the further down you go with the moving averages, it's the higher moving averages. This is the 200-day. This was when I deployed the most amount of money. against my positions. And then the 100-day is one to consider, but the 50-day is also a very important one. And then, of course, there's your 20-day moving average. Now, if you look at my account, you can see some of these purchases. So right here is October the 14th. This is when I actually made the purchase today. Now, I bought several of these and my position's already up $500. This is in literally just a few hours from making the purchase. So that's how this works when you choose the right strike price. Now, this will go up and down depending on the market, but it has another 829 days to expiration. So I imagine this will be really, really green as time moves on. And then you can see here, just a little bit over a month ago, September the 2nd, I actually bought another Leaps call option. This one was at $540. This one's doing extremely well, 21% in profit already in a little bit over a month. Now, I mentioned the major purchases I made on the Leaps call options. I actually did 20 of them. Here, I did that on April the 7th. This is when the market was at its height of volatility this year. And by making that purchase when I did, now these are in extreme profit. They're 167% in profit. I have made almost $300,000 on these Leaps call options, and they still have almost 800 days yet to go. So I can only imagine what this will be worth, but this shows you the power of jumping in when everybody is fearful. Now let me show you, once we meet the important moving averages, how do you select what strike price to use? Well, let's take a look at it. So first, if I'm going to go to Leaps, I need to go at least a year out. So one of the first expiration dates that I might look for is going to be in October of next year. So I see right here, I don't have that. I have something in September, but let's go ahead and go to December of 2026. Because I am buying calls, I will look to the left where all of my calls are, and I'll scroll down to where the action is. Now, when you are purchasing a Leaps, you want to consider looking at something around the 0.7 or 0.8 delta. Once it is at that critical level of support, that's the first thing. The first test is, are we at a level of support? Now we go and search for the actual Leaps. So let's look. If you see right here, the delta is almost 0.7, it's 0.68. But the reason I like this one is we have a little bit of volume on the chain. That helps you get a better fill. This is right there at that 580 mark. So this would be one that I would select if we get down to that important 50-day moving average. Also, you can go right here. This one has a lot of open interest and some volume too. It's right there at the 570 mark. Now this delta is 0.68. If you wanted to be a little bit more aggressive, it's going to cost you a little bit more, but you could go to something around 540. That's the 0.74 delta. And the higher the delta, the more expensive it is, but also the stronger it moves with movement of the Qs. So you have to keep that in mind as well. If you're going to buy this 540, you're going to pay $111 per share, but that's much better than paying what the NASDAQ is currently trading at, around $600 per share. Now, if I'm going to buy a skip, I'm looking anywhere 3 to 9 months out. So let's look at an expiration date. Let's go ahead and go to March of 2026. I like using March based on how the market runs, because I will more than likely want to get out of this in January if it's a March expiration date. So for this, I am going to try to find something around the 0.6 delta. So let's look what we have. Right now, we are trading right here at about that 600, 595 area. And if I'm looking at my deltas, I can see right here, this one is something to consider. It's right here at the 590. It's 0.6 delta. And it has 10 on the volume, and open interest is decent at about 407. Now this, if I were to buy it, I would have to pay $46 a share. But again, that's a lot cheaper than buying the NASDAQ, 100 shares of it, at around $600 a share. I like this one right here. It's the 590. It's got the 0.6 delta, and currently it would cost me around $56 a share. So if you are in my community and we do see the NASDAQ hit these important levels, this will be how I select the expiration and strike prices for the Qs. Hey, if you like what you're seeing and you want to be a part of everything we're doing, do not hesitate to go ahead and sign up either for my New Trader Network, that's for smaller accounts, or for my Inner Circle, that's for larger accounts. I promise you it'll be worth your while. You are going to learn so much, and you're going to be supported in ways you never imagined from a trading community. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I picked out another video for you. This is going to help you grasp the concept of expected move. Earnings are coming up, and I will be using this formula to come up with some incredible trades for my community. You can watch that video right here.